Major Tom. ApeAndy to Major Tom. Do you read me? Do you read me?
I read you. What's up,
Okay,
ApeAndy?
great. It's after July 16th. That's old news, but we're looking forward to what comes after July 16th.
Right. We're looking
Major
forward
Tom,
to
hi.
we're looking forward to the next couple of dates, the next capital catalyst, right? Everyone was looking forward to July 16th before because there was these out of the money puts that were about to
Right,
expire, and now we need new catalysts, we need new dates, right, to look forward to.
correct. Major Tom, speaking of July 16th, those puts were out of the money. Some of those puts were like 50-cent put, $0.5 puts for GME. Now, because DTCC Rule 005 is already in place,
hmm
you cannot kick the old can down the road. So, why is the option chain looking so different now
So now the way that the options are starting to
for
look is
weeks after July 16th?
there's a couple of weeks after July 16th that are looking a little bare as far as the options go, and this has been brought up multiple times, and no one can really put a good reason why out there as to why these option chains are looking so empty. And these dates are August 13th and August 27th. It's just strange that
Right, exactly what I'm
strange,
thinking of.
right?
Very strange, very unattractive. Those option chains are looking so unattractive that no retail will buy, no institutional investors would buy, no people would buy. So those option chains are very, very unattractive.
Yeah, it looks like the smallest strike, at least from what people are saying recently, was that the smallest strike available is like $150 strike price, which, usually you have a wide variety of different strikes. Why are you restricting the options chain? Maybe the options writer doesn't want to write the risk. Maybe this is a bug. Who knows, right?
Or are they restricted by DTCC Rule 005? Because if you don't have DTCC Rule 005 in place, these option writers in Chicago, big C people, they will write option chains down to $0.5. Very cheap put options, very cheap call options. Why?
hmm
The purpose is to have, like as you said before, FINRA synthetic short positions. Write the call options at $0.5, write the put option at $0.5, exercise the call options at $0.5, exercising it, creating 100 shares out of thin air. So the regulators are saying, where's your locate? Oh, yeah, sir, my locate are in the put options of strike price zero point 0.5. So they're creating shares like that. However, that's what they used to do, kicking the old can down the road. But DTCC Rule 005 is already in place. So
Yep,
maybe that's why they couldn't write up such $0.5 options anymore. Maybe, I don't know.
it's possible. And what we're looking at now is new dates to look forward to now that July 16th is over and done with. And I think a lot of people are confused as to what's going to happen after July 16th. And that's why I wanted to show everyone this low visibility DD that's very, very good by someone that,
Bob,
yeah,
Bob.
Bob Smith. And we've talked together in this Discord multiple times. So I'm going to share my other display.
Yes, please. I can't wait anymore. I can't wait. Thank you, Major Tom.
All right. So now that I'm sharing this display, and I'll present as well to ApeAndy so he can follow along.
And the viewers watching this video. And while you're doing that, Tom, Major Tom, I'm going to tell our viewers that both Major Tom and Ape Andy has this international Discord, international investing Discord,
hmm
which Major Tom will share later, the link. Our Ape Andy and Major Tom and Ape Andy Discord is international investing because we want the apes, the retails, to freely chat about anything without being downvoted, without being deleted, without being removed, without worrying about what other people have to say. Right, Major Tom?
Exactly. We encourage all types of opinions and ideas on investing, and encourage the ape community, whether you be from on one side of the world or the other side of the world, to meet together in one place. It's entirely
Okay.
free to use,
Mhm.
and anyone can join with the link that's going to be in the description of this video below. All
Okay,
right.
the DD is right there.
Yep. So let's get into this DD. There's an update to cycle tracking DD, and this is again done by Bob Smith, and for some reason only has 493 upvotes. Strange, because he spent a lot of time on this DD. So basically, he's saying that he saw a pattern with the 35 calendar day cycle that started way back when Ryan Cohen initially bought into GME.
which is
And
in August of 2020.
exactly. And over the next 6 months, they continued to aggressively short the stock to avoid margin calls and liquidation. And, here we are today, right?
Right.
So here's the things that he's tracking right now. Uh, FTDs and 35 calendar day cycles. This is broken out by the GME and ETFs. And there's major options chain expirations in their 35 calendar days into 21 days loops or liquidity cycles. Supplemental liquidity deposits by the NSCC, threshold securities lists, and volume and daily FTDs.
Right.
So we're going to try and go through this DD and make it like more understandable for the everyday apes.
I see 20 dates.
Yeah, so look at all of these T plus 35 dates, right? These are the volumes and everything. And this is for options, all right? So look at the dates on the side. These are when the options are expiring. Notice anything strange about these dates? Let's look at this. There was 342,000 options expiring on May 21st. And it looks like there was 383,000 options expiring on, this is April 23rd. And then there is 384,000 options that are expiring now on 7/16. Wow. Okay, so these are the, on the left-hand side, you have the T plus 35 dates is what he's explaining. And on the right-hand side, you have the day that the option expired. So if I'm reading this right, we have January, February, March. March 19th had a lot of options that expired. And then we saw movement on 4/23. And then over here in April 16th, there was a lot of options that expired. We saw movement in May. So that brings us to our next series, right? This 7/16 options expired. That's right here. This is going to carry us into August 20th is what it's saying. And I think it's strange how they pick August 20th of all days, how interesting that is, considering like this whole Moon Jam by GME. It's from next Monday till, or no, it's not from Monday. It's from July 20th to August 20th. That's Tuesday, right?
Yeah.
Next Tuesday. So strange choice of dates here, right? And then
Interesting.
this is his charts.
Wow.
For tracking options. I'm also going to link his DD in the description below for any apes that want to check these charts out in detail later. Right, but we're just going to move on to some more interesting dates and skip past a lot of these charts.
Our viewers could go to the link and read it themselves in detail. Let's get to the key points. When moon.
When moon. We're going to skip straight to the juicy part.
When.
When moon. All right. So, key dates, 7/20/2021. This marks T+2 for the options expiration of 7/16. As we explained, big options expiration just happened. T+2 is 7/20. So we might see some movement from the market maker on or near this date. Okay, just something to keep in mind, just a catalyst, potential catalyst. 7/22. There's a rather large T+35 failure to deliver due. How many shares, Andy?
Oh my God, 462K shares.
Yep.
That's quite a lot.
The 4/16 and 10/16 options chain with the T21 cycle is overlapping each other on that date. That's a little interesting as well. We have two T+21 cycles overlapping from a different DD. And then we have on July 23rd is the T+21 infinity loop liquidity chain from all the way back in March, the March 19th options. So it seems like all of these loops are just keep piling on top of each other and on top of each other and on top of each other. And
they're converging
right
into a perfect storm. Right.
And I I think it's also important to note that Reuters, the other financial investment website, just announced today that GME has a short squeeze score of 100 out of 100.
Oh, you mean Reute? Reuters, Reuters,
Yes,
Reuters.
if that's how you pronounce it. But
Yeah.
they have GME on a short squeeze score of 100 out of 100, the
W-
highest possibility for a short squeeze.
There you
And
go. There you go.
all right, the last date here we have is August 20th. Of course, it's the T plus 35 date from this options expiration. And since January, these have had really big moves in price, and it looks like that the dates that we're looking forward to here just so happen to be exactly within this Moon Jam window, which is Moon
Yeah.
Jam is an event created by GME.
Right.
I just think it's funny how all of these dates just coincide perfectly.
Okay. Now, with all these catalysts converging together, um, I'm putting on my red team hat. What's a red team hat? It's in Air Force combat tactics. You have pilots being trained with much more experienced pilots. They play the enemy. They play the red team. Okay. I'm putting on my red team hat. Now, if I'm a red team with all these catalysts in place, how do I dampen? How do I dampen it in case it gets too high? In case the gamma gets too high?
All right, so
How
now
does
that
that?
005 is in place,
Mhm.
you can't roll these options without covering anything,
No,
theoretically.
no, sir.
If 005 is working. So your
I
only
believe it is.
options are to buy calls and let the price run up and make money on the run up, or you buy you basically do the same synthetic short position down the chain of options, like maybe to September or a later date or a later month. You synthetic short again, and you build up a bunch of shares, and you prepare them for the squeeze up, and you start shorting the squeeze up, so you don't have as much price movement.
Okay. Let me repeat that in simpler English, in ELI5 English. So, given these puts that expired OTM, those shares that were hidden now becomes unhidden. How many are there? Let's say 40 million shares because the contract was 400,000 put contracts. One contract is equal to 100 shares. Now, these 40 million shares are unhidden. How do I take care of them? I'm SHF, I'm Big C. I have to cover them, right? When
Yep.
I do cover them, which I must, given the DTCC rule 005, I have to take care of the old can. How? I buy them back, I cover them. But since I must do that, why don't I also buy call options to profit on the way up? Is that what you're saying?
Exactly. That's how they can cover some of their losses. They buy calls and then they profit on the way up as well. And the other option that they have here is open up a new can further down the road and then use those shorts to suppress price so the price doesn't margin call any of their potential friends.
Right. The Wolfpack friends that they
Right.
have. Um, Major Tom has counted roughly 40 plus of them are in the wolf pack. Now, um, since I have to buy those shares back, so I buy a set of call options because one call option contract equals to 100 shares. And so I profit on the way up. And that set of call option will offset my previous losses. Profit and negative losses. Two of them
Exactly.
together is equal to zero. Hey, but I'm a big hedge fund with powers. I don't just want profit and loss equals zero. I want more. So I buy another ton of call option to be net positive. Is that what you would do?
Exactly. I would buy a ton of call options if I in this situation, if I was wearing my red team hat, I know that I can't dip the price much lower because GME has a fundamental value. At a certain point, other big money and institutions are going to jump in on this play. The company is worth X amount of dollars. And the closer they get to that fundamental value and price, the more they short the company, that's when big institutions get in and they say, oh, look, a discount, and they buy in. So if I'm the hedge fund and I know that I can't get the price lower without big money getting in, and I don't want to face apes and big money at the same time, That's dangerous. So what I would do is I would buy a bunch of calls and let the price come back up. So that way it's only me versus the apes. And that way I can use some of the profit from these calls to cover some shares. And also the extra calls that I put, I can try and get some profit off of.
Right. So both of us are putting on the red team hat because the company, GME, they've got Amazon people, they've got Chewy people, they're doing a great job transforming the company into e-commerce, e-sport. And so the company's doing their job, and the apes, those apes, they just won't go away. They just keep buying and holding. What can I do? What can I do? I can't push the price down even further. So why don't I use the apes' coiled up energy, boing, going up,
Exactly.
boing,
Exactly.
going up. If you can't fight them, go along with them, right?
Yep.
So, but once the price gets so high, so high, so high, then what would you do if you're Big C? Once the price gets so high, so high that the institutional investor says, oh, that's way out of the value. So you're facing only apes. What would you do?
Then I would look to short it back down again and put the puts there and short it back down.
Right. Right. Now, now, but but if the apes still buy and hold and won't go away, then when you try to short it back down, it doesn't come all the way back down, correct?
Right. This is what we saw in the July 16th options chain. They were trying to hit certain prices when they shorted down from the share offering. When they shorted down, they were trying to hit particular prices wherever their strikes were at. And they didn't get the price low enough to make those puts come in the money. And that's where we're sitting now, where they lost a lot of premium in those contracts. And now they're fighting apes on the way back up. They're fighting institutions if they try to drop this price any lower. And there's not many options other than to just try and buy calls and ride this up at this point.
Right. Major Tom. So now I'm taking off my red team hat. I'm a very, very smooth brain ape. What do I do? Does buy and hold strategy still work?
Yes, it's never stopped working.
Yeah. It worked so well. It worked so well. It worked so well that Big C and all their Wolfpack friends couldn't get the price of July 16th back down to 50, back down to zero point 0.5.
Yep.
Originally, back in 2020, back in 2019, they thought they could get it down to zero point 0.5 strike price. Back in 2019, back in 2018, back in
Yep.
2020, they thought they could. And at that time, what was the only option open at the middle of the year? July 16th.
Yep. And here we are now with a ton of options that had expired. And now we have new dates to look forward to. We have July 20th to August 20th, which also happens to be Moon Jam. So I'd like to say to everyone that's holding GME, happy Moon Jam. And but Andy, let's talk about some AMC stuff for all of the AMC apes out there,
Oh, I love
because
AMC too.
because we
I
love
love
GME
taking them.
and AMC, right? So let's talk about some AMC stuff. Um, so
I'm not going to the movie theaters, Major Tom. I'm waiting to see Quiet Place 2. I'm waiting to see Top Gun 2. I'm waiting to see Black Widow and all that. Okay,
yeah,
let's go to the movies.
there's movies coming out like crazy. Movies have been backed up due to COVID on release
Uh-huh.
for months and months and months, actually years.
Oh, and the new James Bond movie. Are we getting to be movie critics here? No, 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 no. Let's stick
No,
to.
no, no. But let's talk like revenue though. Like how much revenue did Black Widow bring in? Like record revenue. And Black Widow wasn't just shown on AMC, it was also shown on Disney Plus. It could have been purchased and watched at home, but so many
But
people went out
we
and
could get
watched
that
it.
home too long. I want to go to the movie theaters.
Exactly, exactly. And that was proven. That was already proven. They hit like some kind of like box ticket record or something like that. And it was crazy. And especially for a movie that you could have watched at home on Disney Plus if you paid $35 on top of your Disney Plus subscription to watch it.
But I'd rather go to the movie theaters with many friends and eat popcorns together.
Exactly. And this is kind of adding to that point where just like GME, the price squeezed up and there was a correction, but the hedge funds see themselves in the same problem. If they keep shorting AMC down lower and lower, sooner or later, the fundamentals of the company will meet the current share price because
Right.
so much revenue is coming in.
Right.
These are both COVID recovery plays, and both companies are continuously recovering from COVID.
Yes, exactly. And the fundamental value of AMC now would be much higher than when another respected YouTuber, Trade, when Trey was interviewed by CNBC, I remember he mentioned a certain price. When CNBC's Andrew asked him and he said that price, I believe our AMC fundamental value is way more than that price that Trey said on CNBC. Do you agree?
I agree. And the longer that the hedge funds drag this out, the longer that they drag this out, the more cash and revenue and profits and business expansion and capitalism these companies get to grow upon
Yeah.
because they're making more money, they're making more revenue, and they've raised money from the shares from the apes helping the cause. They've raised money and they've come out of their debt. They've come out
Yeah.
of their debt to a certain point.
Major Tom, may I mention a point about AMC?
Yes.
Many of the retail investors, including ApeAndy, when AMC didn't make into the Russell 1000, we were disappointed. But then I pointed out a fact for people to have a thought about, because even though AMC didn't make it into Russell 1000, AMC stayed in Russell 2000. But because of the share price going up, AMC's ranking in Russell 2000 went up, 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 and up. So all the ETFs that has to copy Russell 2000, because Russell 2000's AMC ranking went up, all the other ETFs that are copying Russell 2000 must buy more AMC because
Exactly.
the AMC ranking in Russell 2000 went up.
Andy, is that taking from the supply?
I believe so. What's your take? I
Right.
believe so.
So if these ETFs have to copy the Russell 2000 and
They have,
they
they
have to
have.
buy more AMC, then that takes away from the supply of AMC. And if apes are taking from the supply and other ETFs are buying the supply, then what happens to the demand?
The tradable float becomes less and less and less and less and less and less.
Yep. And this is where we have, big rockets or big spikes in share price.
Mhm.
And I'm looking right now very bullish on AMC and GME because they're both getting closer and closer to that lower support line and closer to that fundamental value of the company to the point where it doesn't make sense to short them anymore.
Okay, Major Tom. Again, red team hat. Putting on red team hat. Now,
Okay.
if if I'm an SHF, I short GME and short AMC all the way down, down, down. Initially, I thought that was to my advantage, but then I need to consider the fact that if I short GME way down too much, and if I short AMC way down too much, it comes to the point where people jumps in and buy. Institutional investors jump in and buy. Retail jumps in and buy. Value investors jump in and buy because, hey, that's a value buy at that price. So
Exactly.
a knife cuts both ways. The knife cuts both ways. It could help the SHF. It could also hurt the SHF. Correct?
Correct. And there's a lot of retail traders that bought into GME at $300. There's a lot of retail traders that bought into AMC at $60. So to see the price now at half of what it was, that's a value investment to any retail investor as well. Retail investors that bought at high numbers, now it's very attractive for them to average down, buy more shares. So if you continue to short the price, you face that problem where more people will buy. The lower the price, the better the deal, the more people that buy. It's no different from if you're shopping in the mall and you see, your favorite video game is on sale for 80% instead of 60%. You're probably going to buy it.
Right. Right. Totally agree. So that's why both Major Tom and Ape Andy, we love both GME and AMC. Okay. Well, it's about time to wrap up. What would you like to talk about in our joint video for the next video? What do you
All
have
right.
in mind for the next video?
For the next video,
We're
it'll
wrapping
probably
this.
be let's do the next video like a week from now, and we'll see. There's 1, 2, 3 dates that we're looking forward to next week. 3 possible
Mm-hmm.
catalysts. So I think our
Mm-hmm.
video next week is going to be huge because we can talk about if any of these catalysts held weight, if any of these catalysts are uh, are working, if any of these catalysts raise a share price, then maybe we
Right.
can start to pinpoint, what theory on Superstonk seems to be the correct theory as far as what influences price movement.
Okay, that's what Major Tom will be focusing on in our ApeAndy, Major Tom, ApeAndy joint weekly video. Now, what I would like to talk about in our next week's joint video is that it takes about 2 months for blockchain setup to be verified by Certex, Certiki. I could have got that wrong. But Certex people are saying that when you set up a blockchain, we need to certify it and run tests on smart contracts for at least 2 months before anything could be officially working and issued. So
Okay.
once you have a blockchain set up, say for instance on July the 14th, you have to have at least 2 months of working time with Certex to verify the smart contracts, to do testing, to see if all works out. So July 14th plus 2 months, that would be something in September to look
So
forward to.
like September
Mm,
14th.
no exact dates, no exact dates, because
Right.
the GME has set up blockchain. They have blockchain teams, right, Major Tom? We'll talk about
Exactly.
that in the next video. Okay, for now, stay safe from COVID. And again, ApeAndy loves both GME and AMC.
All
Okay,
right. This is Major
let's do.
Tom signing out.
Okay, roger that, Major Tom. Roger that. See you next week.
See you, Andy.